So we've seen a big drop in prices over the past year. What's your idea about the next, I would say, 3 to 4 months to come in terms of price development?
Well, I think that the prices on the hubs are going to drop dramatically when the warm weather comes. It wasn't reflected in the responses of the delegates this morning. But, we've just come out of the coldest winter in most European countries for about 20 years, and prices have barely moved above levels that we would expect to see in the spring and the summer. So I think we're in for a difficult few months in terms of prices.
I can imagine that. And E.ON recently announced to move to much shorter term contracts. Can you elaborate on that? What's the reasoning behind it, and also what it does with the price, such contracts?
I mean, my impression is that with all of the major utilities, they're having to look at the influence of spot prices on long-term traditional oil indexation. What they're having to say is, look, we've got to have more spot prices in the index, and all of the producers are having to, at least at the margin, concede that. We understand the figure is about 15% this year. Now, my expectation, if oil prices continue to rise and gas demand doesn't recover, that will continue, and we will see a progressively larger percentage of hub prices in both the base price and the index in long-term contracts. But I don't think that means long-term contracts will disappear. I just think it means that they will change, they will adjust. If you sign a new contract, of course, then it will be different. It will be much shorter.
Yeah. And in terms of linking the gas price with oil, is that something you expect the next 15 years to still be there, or with to come up with the LNG and the new markets and more liquidity, that the oil price will really disappear on the long term?
Over 50 years, yes, it will disappear. But I think the transition will be relatively gradual unless the market continues to go against oil because the price increases enormously, whereas the gas supply-demand fundamentals remain pretty much as they are today. But I would expect that legacy contracts, these long-term contracts, will continue to have a share of oil indexation probably quite far into the future. But progressively, hub prices and perhaps power prices will take over as the main benchmark for gas prices.
And what's your view on the relation between, I would say, the liquidity of the European market and I would say, becoming more and more liquid, and the relation to price? How does that play together?
Well, clearly the hubs have got to be much more liquid before they, or some of them are, accepted as benchmark prices. But what's very interesting is that if you look at the hub prices across Europe, they're all very well co-integrated. NBP, TTF, Zeebrugge, NCG, they're all within, pretty much €0.50 of each other. And I think that will continue. You'll start to get basis pricing as you do in the US. Arguably, you already have that. But essentially, this is a gradual transition to a new system, which there's a possibility that there could be a revolution if things really change fundamentally. But that's not really what anybody wants.
Okay. Thank you very much for your time.
No problem. Very good.